Hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock analysis show where we analyze and see what exactly happened in the market using the technical charts and try to learn something from it and then plan for a better trade for the next week. So, this is analysis for the week that's starting tomorrow, May 8th, Monday, 2023, the second week of May. So, here we go. Here are the charts. The weekly charts are showing pullback. Here we have inverted hammer weekly candlestick, and the Banknifty is showing a dark cloud cover. It's a bearish pattern again. Both are bull traps. The bulls got trapped while trying to move up. Market reverses, and Banknifty, look at it. It's very deep cut that has happened. And this is following these tipsy twins. Index adjustment that is done in MSCI index realignment related sell-off that has happened. The tipsy twins, which is contributing the maximum to the index. Now look at the daily charts. That's an inverted hammer for sure. So it was a super rally that was going on. That got hit suddenly single day Friday. It's a single day Friday's move on Banknifty. Look at this. That's also kind of an inverted pattern, but look at the candles, wick size and body length. It's deep cut, and clear bearish Friday closing is seen on daily charts. Right? That's where we are. We're still above the breakout zone. Good pullback, but a flat close. Deep cut Banknifty. Remember, Banknifty is very close to the all-time high, 44,000 plus 150. So it was very close to that, hardly 500 points, 600 points away from that, and then it got reversed and topping the bulls, but still well above the support zones and the previous breakout zones. Let's just summarize the week. Just a flat, absolute flat close, just 4 points up on Nifty, and inverted hammer on the weekly. Inverted hammer on the top of a rally indicates that there is a probability for market reversing, but that is only confirmed by the next candle, the third candle. So if the third candle also turns to be bearish, then it becomes a candlestick pattern that could be bearish. But it's only if it's only confirmed after the third candle forming and closing above the previous candle. So we can call it a bearish candlestick for the weekly, but it's not confirmed. So it's an absolute flat close. Nifty has this strength. What happened was only on the Banknifty is very evident. So, but still, it's a bull trap. It's a bearish candle. It's a bull trap. It's a hammer. Hammer in the top could probably unconfirmed, but could probably reverse. Remember that we are in the middle of a rally. Absolutely, we're in the middle of 8.6% of up moves happened, and then that's what this is happening. Market has broken out from the trend line and previous breakout zones and all that, and that's what this happened all of a sudden on a Friday. Right? So Banknifty is what could hit all 600 points lost in a single day, 1.37%. That's it, and the dark cloud covers the bearish pattern. Very bearish pattern. But remember that 2 weeks back, Nifty also had an engulfing bearish pattern which got negated and the rally continued. So, any candlestick pattern is confirmed only if the price moves above or below that particular candlestick's high or low. Right? So, 3 star, only after the 3rd star is formed and confirmed would. The next day only it confirms that. So it's not confirmed. The patterns may show up. You have to be cautious, but it's not confirmed bearishness until the next day's price will happen. Right? So look at this: 13.3% was the rally that happened with the previous swing high, right? After a 12.5% of correction, so it was clearly recovered everything and then pulled back. And we had a breakout, and we still have a more price that's above the breakout zone. So we were in the middle of a rally, got paused because of a particular stock that got sold off heavily, and a particular index that got pulled back heavily. It's always very teach, but Nifty still managed to close positive, 4 points up. Look at the trial candles of that 187.1% cut on Nifty, and the inverted hammer again it holds above 1850. That's very bullish for Nifty to have done that. and the overhead short pattern is still intact. The breakout has already happened and it has come back to the neckline where it could take a support and then bounce up. And if you also gap down but taking the support that is seen the previous breakout zone, and it's 1024 points lost in a single day. Right, so 600 points in a week-to-week basis, single day 1024 points. That's a kind of hit back that is happening. Still it's an inverted hammer, and it is closed below the 43,000 psychological rounding number. It is closed below that, right? So that's it. But again, there's also psychological 18,000 on the Nifty is not breached yet. Right, so basically market moves a rally and then nosedive because of the bank. These moves of 1,000 points single day because of the HT2 issues, and then still it's at a support, right? For the sell-off does not happen, then we still done a minor correction or a pullback and then a retracement, whatever we call it, and then there's a possibility of a change in priority pounds where the market takes this support, which was a previous resistance, and then moves it from there. So so far not that bad as we think from the candlesticks. The Bollinger Bands have begun the contraction. You can see that this is what the Bollinger Bands are showing, right? So remember, we are about to have a walking on the bands concept where it's extremely bullish, but then got hit back, but it's just beginning the contraction. You cannot say it's contracting actually, so it's still bullish. Right? But look at Banknifty, it is bent, so it is taken a contraction has already started there. So there, the sideways consolidation is what we may expect for henceforth. For very short term, these are Bollinger Bands are normally taken on the daily charts. So that's what you see there. Now that's what Bollinger Bands are saying, right? So that's the price action. Let's move at the support resistance zones, and then this 18,000 and 18,300 is the zone that we have been talking about as a heavy resistance. So remember, we have three lines, and these charts remain exactly the same chart as last week, right? So that's a resistance condition zone. So if Nifty is able to fight it out and then move further from 18,300 zone, then we are in good shape. So resistance 18,265 that you see here was already taken out, but still it's marked. So once again, we just managed to close above that, and then that should be fine. But resistance is at 18,267 kind of levels, and then after that 18,473, and then 18,696, and all-time high. So that's a Nifty downside. And also the resistances would come in at 18,200 first, 18,135 levels also. So supports now would be 17,972 and then 17,863. Then you have 17,820, that could be a 20 moving average exponential, and then 17,700 nearby zones, 17,688 again moving average 100. So likewise, right? So 20 DMA is not here. 20 DMA is up here on the red. The red one is 20 DMA. This is 150 below that, and then 200 DMA is down there near to the 17,500. So 17,500 could be a very good support zone. Right after that, you have the 17,432 and then 17,300. So the supports on the outside. Right, that's the resistance supports on the Nifty. Look at Banknifty. All-time high is so very close. Right? So very close. 44,151. So that's resistance, and before that we have another resistance at 43,592. So 43,600 is a major resistance. It's also a previous swing high, which was taken out and then got the pullback. So the previous candles, right, Thursday's candle high would be a resistance. That comes to 43,600, 700 zones, and 43 is. And after that, you have the all-time highs. So now the 43,000 will be a resistance now. So now that it has slipped 400 points below that. Before that, you have another resistance at 42,733. Right, that's from where it got broke out. So it's also a support zone. You can see 3 pounds up from here could be possible. Outside the support will be at 42,000. Before that, you have the 20 exponential moving average at 42,350. There's a red one, and then you have the 50 moving average, this blue line, and this exponential moving average, then 100 DMA at 41,273. So supports 42,000, good support, 42,350, 42,000, 41,670, 41,650, 41,273. These are all the supports on side. The final support would be at 4,700 levels. Right? But moving average support is there along with the gap at 40,000 level. So beyond 40,000 level, only if it moves only we need to worry. Until then we have all the supports on there. Right? So that's the resistance support levels. Make a note of these levels and correlate that with the operator strata levels, and then work on that. Now this chart that you see here is of the momentum in the trend. We're basically using the RSI, and the trend we are using the ADX indicator. So the momentum RSI is showing that momentum has dipped. Definitely you can see that band that has happened on both the dies. Not much on the Nifty, but on the Banknifty is definitely on the victim mixes. Left side you can see the weekly charts, and right side you have the monthly charts. Top you have the Nifty, bottom you have the Banknifty. Right. So what does that say? So regarding the trend, the Nifty remains in the bullish zones, bullish momentum, basically momentum zones, but it's falling, right? But in the medium term, it's sideways. It's straight. It has fallen sideways, and it's falling on momentum. But there is a bullish divergence on the Nifty. On the weekly charts, you can see that. It's on the daily charts, not on the weekly charts. See, and the price is falling down. The file is falling up, and then momentum is falling down. So that's a divergence that could work out to give a good up more possibility. Along with that CIP, the momentum divergence that should work out well. So that's the momentum. So otherwise, momentum is bullish in the short term. Trend is also bullish in the short term and the medium term on both the indices. ADX trend indicator. Momentum got hit back. It has slipped sideways on the Banknifty. Right, Banknifty, you can see that. Daily time frame, short term, it has slipped. On the medium term also it has got hit and slightly slipped, but it's right. But still it is up. So yeah, that's it. Right. So that's something that you have to see. Right. So momentum overall has got dipped. We cannot say completely it slipped into sideways because it's just a one-day price action. Right. So we cannot be precise with this RSI 60, 55 on this level. So it could move here and there. Right. So let's see the momentum. If it further resists or further moves in the coming days, then we have to worry about. But otherwise, as of now, it has definitely got a hit and has fallen down from that bullish momentum for sure. But trend seems to be trend will take time. It's lagging indicator more. Even momentum is also lagging indicator on our side. ADX is even more lagging. So trend indicator is it takes time to slip, to cross over to the opposite zones. So as of now, trend remains bullish, but the strength of the trend remains to be gone weak. Otherwise, trend is bullish. Momentum has got hit and slipped slightly to sideways. That's all that has happened for those days. If you just summarize that, that's how it is. Now, moving on to volatility, the operator's analysis, what we are seeing here. So, India VIX, what has happened? It spiked up 12.4%. Not too bad. Still the lower regime, but 12.4% of spike in a week is a big spike up. Right? That's something that we have to be cautious. So remember, we had been warning about this whenever the price went below the 11 to the 10.5 and 6 kind of levels. We warned that the spike ups from here historically, below 11 kind of levels has happened only very few times in the last 1 decade. If you see, it has happened only in 2019 December and then July, August of 2017. So all that time, after spending some time, you never know how long it will spend, but every time it spends some time and the spikes are huge. That's exactly what happened. 12.4% of spike. Still is a lower regime. But any spike from here about 15 plus kind of levels could be cautious. You have to be cautious. Whenever that is there, there will be that big falls maybe happen. So you have to be cautious, right? But so that's the main rotating nature of the VIX. It falls down and then you never know how long it stays there, and more it falls down, there is every probability that it can be of main rotating nature of spiking up. So remember, we had a lowest historic levels of leaks last week, and now we have a 12.2.5% of spike in a single week, and that Banknifty losing 1,000 points in a single day, and all these things are happening. So big spikes, causes a lot of panic. It shows the greed and fear. So this realignment of the HTFC sequences suddenly brought in 12% of fear, right, or greed. That's what happened last week. The open interest obviously it will get. If you look, if the features, especially if you look at that, you can see that it's a long unwinding that has happened in the bank. It is extremely bullish Banknifty, and suddenly we're seeing that people are going short. They're unwinding their positions, long positions, and then thinking of going short. That's what the futures saw a build up, but short build up clearly happened on the Nifty also in the previous day. Options on the options for the May 11th, 2023 weekly expiry showing that the put call ratio has also hit back. Remember, we had 1.2 kind of levels of put call ratio, extremely bullish, but now we are closer to the bearishness more. 0.64 is not that bearish, but closer to that bearishness in the Nifty, and 0.52 on the bank. So now suddenly turned to be closer to the bearishness than the bullishness. So option risk, obviously has got reduced. As more to the bullish, more to the bearish side. If you analyze the open interest data on the Nifty Bank, you can clearly see that there is a lot of greens, which is a call writing that has happened. Call writing in the Banknifty also has happened a lot. That means there's stiff resistance out there that's got built in the open interest contracts. Look at the open interest of the options Nifty 18200 is where the highest put writing is seen. That's the same place where the highest call writing is also seen. So it's kind of people are selling and buying at the same spot. Option writers and we're doing both on the same spot. That's why the second level is also not too far away, 1800, and open resistance on the second highest level is 19,100. It's too far. It means there's not much clarity on how the Nifty would react, with the fact that Nifty did not fall, and it's a one-time event that happened in one index. So people are not confused whether this will pull back at the same intensity, and market will seem to hit the all-time high or not. That's why you still see the call writing at the 19,000 kind of levels. Right? Now look at the Banknifty, 43,000 and 43,000 tight range, where the highest put and call writing is seen at these zones. Second highest is at 42,000 and 43,000. The highest put and call writing is seen second highest. So people are not seeing big crashes to happen. The range is narrow on the Banknifty, and Nifty also the range is very narrow, except that some of them indicates that it would come back and the rally could ferociously move on the upside. You see in the 90,100 that you see. That's what options writing. So a lot of change in operators of resistance call writing is seen on both the ties. You can clearly see that, right? So that's what as of now. This keeps changing every day. Contracts and operators keep changing, so we have to keep watching that. But as of now, that's what operators is. We just very much in the bullish zone, so suddenly taking a hit back was one single day's Banknifty's move. Let's just summarize what the sectors, industries, major industrial sectors, how did they perform. So you can clearly see that this list does not have the Banknifty because we analyzed it separately. But look at this, nothing has happened. It's just a pharma which is flat, 0.05%, hardly any fall. Nothing has fallen big, right? It's actually everything is up. The IT is closed flat, but it's still green. Metal is closed flat, still green. Auto is made 1.2% up, green. Right? Pharma is hardly down. FMC is nearly 1% up, and reality is flat. So it is flat or green, flat or green mostly. Right? Nothing is down. So across the sector, nothing else has happened. Only the banking index is got up. That is something that we have to clearly understand from this. Now, which is the most bullish if you ask? Auto and the FMCG are doing good. We are having bullish momentum on both the time frames, high time frame and long time, medium time frame and small time frame. That's weekly and daily. So we can probably attempt to trade in these sectors and stay away from the sectors which are struggling. Right? Basically, none of them are in the bearish zones of the momentum. Right? It's all sideways in the IT. So IT has picked up. It's another good thing to see. And otherwise, some of them are bullish in the short term, but yet to be bullish on the weekly charts. So reality is bullish on the short term. Okay, Alma is bullish on the short term. Metal is sideways, but yeah. So except for metal IT, but that's all bullish in the short term. That's also some good things. So across sector, nothing is happening because of the violent moves of the Friday. Right? That's what it indicates. So this is the recovery of the IT sector charts that you see. Momentum is climbed in the sideways zone. Metal also climbed, but remains in the sideways zone. Trend crossover is about to happen there. Auto sector is bullish, and then further moving up into the bullish zones. Momentum and from also not directly in the bullish on the medium term, but yeah, rising up momentum. FMCG rising up, breaking out from a consolidation box pattern. Momentum trend both are bullish. Realty sector is just attempting to break out from that channel of parallel. Momentum is just getting in the bullish zones. Just below that, rising up momentum. That's how the industrial major sectors are there. And now the heavyweights in the that contribute most to the index. What happened? This is the culprit guy, the HDFC Bank and HDFC Limited. These two caused all the troubles. Both of them have momentum slipped to the sideways, obviously, and it's a power and flag, which actually took away the all-time high and made a new all-time high. 72.6 was breached, and just that is where the selling happened, right? So, let us wait and watch what happens. It's a flag and fall breakout and a consolidation breakout that is in the making, and HDFC Bank hit the all-time high and then fell back and do the same bear zones with a sideways momentum. Right? So these two guys what's causing all the damage because they have huge weightage on the index. The lines was moving up, but then it's interesting small body candle, otherwise sideways momentum and trend is just crossing over on the bullish zones. ID is recovered, but if we again forming showing the resistance with the industry candle, momentum remains in the bearish zones. Right, so it's the only sector that has got a bearishness, I think. It means the heavyweight stock it has got bearish one. Apart from the Nifty, is again showing industry resistance is there, but sideways and rising up and not in the bearish zones. Right. This is having a divergence. Right. So, could be a bearish divergence. So, yeah, so we have to keep a close watch because it's a big gap that's formed here between the gap down. So as a result that is cleared and price moves above 100 and 450 kind of levels. No, you cannot say it is weak. Also, it remains bearish, but green week or TC is also showing results, rising up momentum. Banknifty also small but in DC, but climbed almost to the bullish momentum after a while, for a long time. From April, almost 2 months since it took to, almost 1.5 months it took to recover, climb back to the momentum outside was 60. Kodak Mahindra Bank also climbed to the bullish zones, but small body into CVX. So overall, except for the HDFC twins, others are all flat or indices or kind of small body indices. This is what you see in all the other major heavyweights, right? They accept these two things, right? That's how it is. So across the industry, heavyweights of the huge selling has not happened, except for the two stocks, just like the sector. So things are very clear there. Coming to the institutional participation, Fyers have turned buyers again, 7,500 crores. Surprise, right? So that's big buying by the Fyers, which is good. That's what is holding the market. DIs are booking the profit 2,700 crores selling. Derivatives net longs more flat in both the institutions, right? So that's how it is. So it's green after a long time. The Fyers side, you can see the green buying, good buying, and some huge buying also from the Fyers side. So foreign money is coming in, right? But the AMCSI real took off 1,000 points just like that. We had global markets and commodities, currencies, and all that. What is the currencies? Let's see the dollar index. Slowly is 0.4% down. It's 1.28. It's a cup and handle formation that's happening. It's at a support zone. It can further fall down. There's another support near 200.91. Probably it may stop at this level where it is and then or it could fall down to the 100.9. Right. But it's in a bearish momentum in the Copenhagen formation. So dollar calling off is good, but USD INR, look at this, absolute flat, 81.7, 81, absolute flat. Right. So its rupee is not appreciated much and still remains at the weakest level. That is a flat, absolute flat, even when the dollar index is broken down, although they are not directly correlated. The rupee still remains weak. Crude oil is 7% down, which is good. Momentum is sideways. It's a relief actually. And gold has spiked up once again. Look at this, crude oil 7% down and then bouncing up. Right. Historic low levels, getting back to $61 per barrel levels once again sideways. Right. So this is cool. But look at this. Some more cool. There's a bullish divergence. There is a price is attempted and is inches away from the 2074.7 golden number of all-time high. Inches away from that, it reversed, but a beautiful green close. So this indicates what? People still feel unsafe investing more in the stocks, or hedge more on the gold side, right? Safer haven. That's what is safe. So gold is on inches away from all-time high. Anytime it will break out. So normally, historically, if you see gold makes such big mega breakouts, normally when the market gets hit or falls down and all this. So this market isn't that. So you have to be slightly cautious if you are long on other instruments or equity. Right? You have to be a little cautious when such big moves are happening. But gold remaining at that level works out as a very good hedge for those having multiple portfolio investments spread across different asset classes. Look at this. This is Drawdowns, the US indices, and you can see that it's around 1% down. It's the top of a descending wedge. It has attempted to break out that multiple times. Right? Several weeks it has attempted gone down. So this happened long. So this is this momentum is in the sideways. Trend is crossing over the bearishness. Weekly charts I'm seeing. So if at all it's able to break out, it's very positive. If at all it's not able to break out and then it moves further down below to the bottom, then we have to. As long as it keeps uptrending, it is fine. But it's good that it is on the top of the wedge. It's again bad that it is unable to break out that since long. That's the same case in Nasdaq. Nasdaq is a little more bright. It's close in green somehow, but still at the same descending wedge top resistance trying to break out. And down here we have the S&P 500, which is also showing a hammer. All of them are showing some kind of hammer. The wick size indicates that it's not bearish also that much, because momentum is not in the bearish zone. Sideways is struggling to break out. So it is at resistance. It is a single technical word for the US indices. Just summarize about the global markets currencies. On the currency, rupee still remain weak. Dollar is cooling off. Crude has crashed down, going towards the 70-60 levels. Is good for us. In some way, not good for some of our equity stocks, but as an economy of the country, which is oil importing, it may be good. But some of the major stock prices who are marketing oil, right products, and exploration and all that will have trouble. Gold is spiking up as a hedge instrument, works out beautifully, but gold is spiking up and going to all-time high. Gives us warning signals. Those markets are red. Is good and bad. It's good that it is not ready to go down. It's bad that it is unable to take out the resistance. The more number of times it takes resistance, there is a very chance that it can fail. So that's what we are with regard to global markets and global commodities. Let's move to actionables for the next week. Two topics: TVS Motors consolidation, rectangular box pattern, whatever you call, is broken out with a wide range bullish candle. Good risk trade is possible since the momentum is high and the trend is also high on both indicators, and volume also is decently high. Second company is Titan, which is weekly charts is showing the inverted hammer breakout is possible. That this trade is not ready to take. Momentum is beautiful above moving average decent volume Momentum is bullish, trend is bullish, pattern is bullish, but the signal will come only if this 2790.35 is breached. That's where the breakout happens. If that happens, it could go up to the height of the shoulder. So weekly charts, so it will be more affected on the this candlestick pattern, or this pattern of head and shoulders could work better than on the daily chart. So once you get the signal, probably it may work. It may take another dip and then another rounding pattern can happen. That's always possible. But if this breakout happens, it will be a good catch. Right, so Titan and TVS Motors long calls. Now, finally, the usual Nifty index option strategies. Very simple, very risk free, fully defined risk, and low return of investment because we are looking only at consistent 1 to 2%. So this is a double diagonal calendar spread where we are selling the put and call options with the ROTM somewhere near the 20 points, and then we are taking hedge position for the far week. Now for near week and far week, that's what you do. We're taking a hedge position on both sides on far week. Near week we are taking selling put and call options. ROTM 20 points nearby levels, and then increase your capital size as increase your portion size as per your risk appetite and capital size basically. But it's completely hedge and margin is less. Risk is less. You can always adjust also, increase. So look at the range is beautiful. 7800 is less likely to breach, is less likely now that you already had a made big correction. It may not breach, it may consolidate mostly. So this range of 17,800 and 18,350 may not get breached just like that within 4 or 5 days. This trade is only for 3 4 5 days. It's a weekly option strategy. What do you think is return on investment? You'll have to not to be greedy and then come out before the expiry day. And if big moves does happen, you still have the advantage of the wick spiking up. So this is the premiums will remain intact for the week, so that will benefit a little bit. And you can always adjust by rolling up and rolling on either side, opposite side of where the price is moving. Right, so that's the strategy. Weekly options, weekly strategy. That's a payoff strategy you're seeing there. That's it. Let's summarize and wrap up. What kind of week we had, what we learned from that, what are you in for, what's likely to happen, how we can plan. So it is a pause in the rally, but on a single day, it has nosedived, showing bearish candlesticks, with Banknifty showing dark cloud cover, right, opposite of PRC, and then Nifty showing flat close, the inverted hammer. That's also could be potentially unconfirmed bearish. But remember that we had earlier had a breaking out of the trendline channel and the breaking out from the previous breakout zone. All that has happened. Since we are in the middle of a big rally. That's where this got paused, all because of its two stocks and one dies, right? So normally what hit operators built up this bearish is moving away from bullishness. PCR also has moved away from the bullishness. But the just started contraction. Weeks has spiked a big 12.5% one single week using the as red resistance. So all these things are in favor of the pures, but Fyers turning to buying. Wicks still remaining in the lower regime. Trend on the medium term and short term, both are bullish. Momentum is having a bullish divergence. One of them dies. Price is moving above the moving averages. Right? Price is moving above the previous breakout zone. Higher low price pattern is what is happening now. Change in polarity bounce is possible because it has taken a separate zone where it is acted as a resistance earlier. So, because of all these factors, the market view for the next week remains to be mild bullish. The major resistance on the Nifty exists between the 18,000 and 8,300. Keep in mind. Global cues, Russian fear, inflation, interest rates, spikes, hikes, COVID war, all these things, the uncertainties are still there. They are. Crude oil is under control, but rupee is not gaining much. So uncertainty prevails in the market is a fact. Keep that in mind. Right. And 17,800 to 18,300 is the levels for the next week. 42,500 and 43,600 in Banknifty for the levels to look out for the next week. In the medium term, 16,650 downside swing lows, 36,800 downside swing lows on the Banknifty, 18,300 top 43,000 above. So anything above that is bullishness for the continuation of the rally. So any close for the next week above that for the continuation of the rally. After that, we have the all-time highs that's very close by, especially Banknifty. So always use hedge strategies not only for protecting your capital when you're trading, but also as an investment option. Also, you can have rental incomes by covered calls and separate puts and all the strategies. You can have as happy investments and regular rental incomes that you can own. All that is possible. So it's possible. Using hedging with options is possible. And it's possible to be used with the investing and the trading both. Right? And always when it comes to trading, if you're trading in options, use spreads, vertical spreads, calendar spreads, non-directional. If you're not very clear on the directions, go for this because you will have your capital, your options, doing the option selling, but you will have capital protected. You know what your risk is defined, and you have still another day to play it. Otherwise, overnight risk can take away all of your trade, and then you have to wait for years to get back in there. So play it safe, and as of now, we were in the middle of the rally. We had a pullback. We're still fine, doing okay, not that bad as the candlesticks may indicate. Probably, we're still going to receive the rallies for the thing. So I may go wrong, markets may prove me wrong, but still you have your stop losses, your portion sizing, and your risk reward and all that to protect you, and non-directional strategies, especially if you have options and derivatives trading and all that, right? So play it safe. If you're not subscribed and watching this, please subscribe and share to your friends and colleagues. If you already subscribed, like, and if you like it, and put in your comments, feedback, we can further improve. And please share it to maximum of your friends and colleagues. We have your solution. Appreciate your help this lot. And then if you want to avail the premium service from Telegram, click on the link in the description and you can avail that as well. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.